You can start, John. We're live now.
Thank you. Good morning. My name is John Tracy. I'm a trade specialist assigned to Central New York State with an office in Syracuse, New York. I'm with the U.S. Commercial Service of the International Trade Administration. This export documentation awareness training is part of Export Week. Export Week kicks off World Trade Month and is a U.S. Commercial Service-led initiative designed to provide programming for U.S. companies about market opportunities and export tradecraft skills. General housekeeping, please use the Q&A feature on the bottom right to ask questions throughout. Send questions to all panelists. Use the chat feature for technical questions. This webinar is being recorded. If you object, please disconnect. For those of you not familiar with the U.S. Commercial Service, we are the trade promotion arm of the U.S. Department of Commerce's International Trade Administration. Our objective is to help American businesses succeed with their export endeavors. We have trade specialists in over 100 domestic offices, almost 80 U.S. embassies and consulates around the world. If you're looking for help exporting, exploring new international markets, or overcoming problems during the course of your international sale, we are here to help. If you have not connected with your local U.S. Commercial Service office, we placed a link in the chat where you can search for your local office by zip code. I wish to thank my colleague, Jackie Torsellini from the Middletown, Connecticut office for her partnership in planning and coordinating this webinar. Our two presenters today are from Mohawk Global. Jim Trubitz is Vice President of Business Development at Mohawk Global. He has over 40 years of knowledge in free trade agreements, customs compliance, logistics, and supply chain. His experience encompasses courier, sea, air, and northern border operations. He is a licensed customs broker and a certified customs specialist. Our other presenter is Robert Stein. He is the Senior Vice President of Regulatory Compliance at Mohawk Global. He has over 34 years of experience in regulatory compliance, customs brokerage, freight forwarding, and consulting. With a broad base of trade experience, Robert is an expert in import and export compliance, foreign trade zones, duty drawback, HTS classification, and USMCA and other free trade agreements. Robert is also a licensed customs broker and certified customs specialist. I turn it over to Robert.
Good morning. Thank you.
In the presentation.
Thank you very much, John. Boy, Jim, he makes us sound so smart. I hope we can live up to that, right? So we're here today to talk about export documentation awareness, and Jim and I are going to kind of step through some important things, obviously documentation as well, but some important parties I think would be a good place to start the discussion. So with that, next slide, we have your freight forwarder, right? So when you're exporting and you're looking to prepare documents, you're dealing with your freight forwarder. What does your freight forwarder do, right? Your freight forwarder is giving you freight quotes, information about how much it'll cost, how it's going to get there internationally, right? We're going to arrange that international freight movement. We advise, this is really important, right? Advising on export regulations, and that's going to tie back to documentation, as we're going to see. And also, we help with preparation of export documentation. Okay, so if you have questions about what to prepare and what goes on it, and as you see as we roll forward with this, your freight forwarder can assist with that if they're moving your cargo, and especially if they're filing your automated export system filings, we'll also talk about. Next slide, please. Now, your customs broker, who handles your imports, also in some cases may be involved in your exports. They advise on import regulations, right? Prepare documents for customs entry on your imports, and is considered an expert under reasonable care. So Jim and I, we're both licensed customs brokers, considered experts. The nice thing is if we give you something in writing, that is something that is advice from an expert and part of reasonable care. And again, primarily your customs broker is working on imports, but a lot of you may be working with freight forwarders and customs brokers who fill a lot of the responsibilities of getting things filed, even on export. So you may find yourself often dealing with a lot of the same people. Next slide. So I mentioned AES, the Automated Export System. What is it, right? Well, it is the automated system that accepts your electronic export information, which is a data set that is provided. And we'll talk about how that's provided. But the EEI is transmitted through AES, and that goes through census and customs. And it's a chance for the government to review what it is that is being exported. Now, not everything goes through AES, right, Jim? There
Yeah.
are exceptions, right? So if you have classifications, we're going to talk about classification here in a bit. If you have particular HTS or Schedule B numbers that are under $2,500, if you don't have anything that's subject to export control, you may find that an AES filing is not required. If you're shipping to Canada, in many cases, subject to those same conditions, especially export control, you may find there is nothing unless there is a license, right? So AES is the way the government tries to monitor the stuff that's being exported, and it is tied back to your documentation, which we're going to talk about, things like commercial invoices, shippers' letters of instruction. But it's important to understand this piece because whether you're doing the AES yourself in ACE or you're asking a third party like a forwarder or other filer to file it, it must be filed under the conditions where it is required.
Next slide. So when it comes to AES, Robert, and John, there's a couple major players that are involved. Obviously, the U.S. principal party of interest, and we'll talk about them in a second. The authorized agent is that party that's actually going to do the AES filing on behalf of the U.S. PPI or the foreign principal party of interest. These three main players are key in the AES filing. Next slide, please. So obviously, this one is a very important concept that everybody needs to understand. That's that person or entity in the US that's going to actually receive that primary benefit, either monetary or otherwise, from the export. So many times when I'm involved in looking at an AES filing and I'm auditing a company, I'll look and see if they're the appropriate person that should have been named as the US PPI, because many transactions are sold from the manufacturer to a US seller. So in a situation like this, you may make the goods, but someone else is actually technically exporting the goods. So this is something to keep in mind as well. Next slide, please. So that US agent is going to normally be a freight forwarder. That's the party that may be filing the EEI on your behalf. And one of the important things that I want to make sure that if this authorized agent is filing these EEIs on your behalf, you need to make sure you get a copy. The other part of it that's really important is the USPPI can self-file. And in some cases, it makes the most sense, especially if you have licensable goods. You want to make sure that you're filing that EEI correctly. Next slide, please.
And Jim, just to tack onto that, if you're a US PPI and you have goods going out by courier, they may not be licensable, but you may have situations where you want to have control of that filing. And so those are good circumstances as well when you're not necessarily going through a forwarder.
Robert, great point. And so normally I get a question like this. They'll say, well, if I file, then what do I do with that courier shipment? You're going to actually take that ITN number and embed it into the courier system. And that way you have that record because you need that record for 5 years.
Right.
So the foreign principal party of interest is actually the party that is going to be receiving the goods that as the ultimate consignee. So sometimes there's going to be situations where you're selling to one party but drop shipping to another. So keep in mind that destination point or is going to determine who's going to be named as a PPI in a situation like that. One thing I wanted to mention here, because I get a lot of questions on this, Robert, where people say, okay, wow, this is real high level. Where can I get more details? So here's one of my tips for today. If you go to the AES website under census, they have great tutorials on this. Some are in written form, some are videos. So this would be a really good starting point if someone was wanting to learn how to self-file. You know,
Right.
like we say too, Robert, we'd be great uh, if they have questions. We'd be glad to be a resource for them.
Right.
John,
And
next slide.
well,
Yeah,
I was
go
gonna,
ahead.
we're going to talk about this also when we get to Incoterms, but this concept of routed export transaction, which some people may be familiar with and may not be, this is a good time to talk about it because routed export transactions are different. And when we get to those Incoterms, we'll go into greater depth. But the idea is that if it's routed, it's the foreign principal party in interest who is often controlling the cargo. That's one of the defining characteristics, right? The international cargo. And so they very often are the party that is going to be filing the AES through their authorized agent in the US. So this is one of the questions I know, Jim, we get a lot is, when does the USPPI file? When does the FPPI file? And that does somewhat fall under the Incoterms discussion, but really what it falls under is the routed export transaction. So if you know what a routed export is and how it's controlled by the foreign party, it's the FPPI's authorized agent that files the EEI and AES. So that is a lot of acronyms. Holy cow. And if it's not routed, then it's the USPPI or their authorized agent that files that EEI and AES. So I apologize for the acronyms, but at least I think we identified all of them, except I don't think we identified ITN, which stands for internal transaction
Internal
number.
transaction number. Yep.
Okay.
Thanks. Um, so John, if we go to the next slide, this is one of the questions that we get asked quite a bit is, I have a commerce license. What filing elements do I need to make sure I report in the AES system? And one, you're going to use obviously license code C30. So if you're in that AES system, or if you're going to be providing this information to your forwarder, you're going to be reviewing the EEI filing that the forwarder did on your behalf for this license. You're going to want to make sure that they used license code C30. Also, you're going to want to make sure that you're reporting that license number. And you want to make sure that you got it right. So that's something you're going to double and triple check before you go from there. The ECCN number is going to be a mandatory field. And one of the things that's recently happened, especially with China, is there's a lot of goods that are under license, but they're EAR 99. So if it's not named in the Commerce Control List, which is called the CCL, that ECCN number would be an EAR 99, but it's important that that's declared as well. And then this is something that I think everybody needs to kind of become familiar with, and we'd be glad to share these with you. There's these export information codes that need to be named when you're doing your filing. And most exports fall under what's called OS, but there's different ones now. So I have some people that are doing semiconductor parts. They're under a special supply chain information code now that just was created last month. So there's things to be aware of. And then you're also going to need to report the mode of transport code. So it may be that your goods are going to go to Canada, but go to China from there. Just using that as an example, you would use the mode of transport appropriate for that. And then last but not least, it's really important that that license value is reported, because when you see in the AES system, it will keep deducting license value amounts from the total license amount that you may have received. So example, you have a license for 300,000 and you're going to send out a shipment for 100,000, you're going to have 200,000 left on that license.
Right. And you know, if a lot of this license discussion seems foreign, no pun intended, or you have questions that arise out of this because you're not familiar with this is a good place, especially if your goods might be licensable, to have a discussion with an expert, right? Whenever you run into things that you're not familiar with, it's always good to have an expert advisor who can either assure you that your goods are not licensable or help you find out if they are and determine the correct license information that is going to be required. Okay. So Susanna Murphy dropped a question into the comments, and if we can get the questions into the Q&A box, I guess there's a chat and a Q&A. But Susanna, we are just getting to your question, so don't despair. There's a question about the EEI, so let's go to the next slide. All right, so important EEI takeaways, right? Electronic export information. First of all, we need to make sure that you verify the classification and the description. So a lot of times we get a description kind of like, I don't know, it sounds like stuff or things, okay? And I'm exaggerating, but very often the descriptions are quite vague. And the USPPI says, or in some cases the FPPI on a routed export will say, hey, we got the right Schedule B number. It's the right one for this commodity. But without the right description, it's really impossible for both the authorized agent who's filing, as well as census and BIS and customs, to ascertain whether the filing is actually correct. So just like with an import entry, description, description, description. If the layperson can't understand what it is based on the description, there's no way to validate if the Schedule B or HTS code is correct. All right. And then check to verify that the correct Schedule B number was used. So if an EEI is filed, did it show the Schedule B number that was provided? And we're going to get into shipper's letter of instruction as one of the documents, right? That's where you instruct this is the Schedule B number or HTS code to be used. Was that actually used, right? Very important. What about unit of quantity? If you specified an actual unit of quantity, and sometimes the units of quantity might be number as an example. So you might be shipping cartons, right, that are on pallets, and inside each carton there's a number of items. So maybe there's a dozen of your commodity. Is the total number being reflected in the unit of quantity? And is the right unit of quantity being used? Are we reporting dozens? Are we reporting gross, which is a dozen? So correct units of quantity and actual quantities need to be correct on the EEI. And then this goes to the question that Susanna Murphy sent in, which is the question about, should you get a copy of the EEI as the USPPI? So the answer to that question is always, right? The EEI is the validation that the information that was provided was filed correctly. Now, the next question that usually follows, I don't know if it's in there or not, but the next question that follows is, if the FPPI asks for a copy of the EEI, can I send it to them? Jim?
No, you can't.
You cannot, right? Because it's not allowed by regulation. So you can file the EEI, but if the FPPI requests that, right, you have to say no. We can provide you with the ITN, that internal transaction number. That's a validation that the EEI was successfully filed. But as an exporter, you absolutely want a copy of that EEI. When we get into those routed exports, especially when you get into a scrape with BIS or customs, you want to be able to prove, hey, at least the filing that we requested was done correctly. Okay.
Okay.
Slide.
So
Oh, go ahead.
Robert, it looks like we got two questions related. One of them was related to description and classification. Someone wanted to say, can I just use the tariff question or tariff description that's provided in the Schedule B book? My
No.
recommendation is what? Basically sprinkle your words for your product in with the words from the tariff to make it something understandable to the customs official that's looking at the export filing in the Schedule B to see if they match up.
Right. And I'll give you a good example. That's a good point. Like there might be a classification for motors that have a range of power, right? From one set of horsepower. Actually, they put it in watts, right? So it'll have a wattage range from 746 watts up to whatever amount. And your motor might fall right in there by description, but your motor has an actual rating. And so even though it's very specific, you should include that in there because it would demonstrate that that Schedule B number is actually correct because that wattage rating is within that range. All right, next slide.
So we're going to kind of take part 732 of the Export Administration Regulations, which is also known as the EAR. In 732, they have what's called steps for using the EAR. And one of the first questions you have to have as part of your due diligence is, what is the item? Is it classified in what's called the Commerce Control List? And so without getting into great detail, the Commerce Control List is 10 chapters, and it's based on the function and the use of the article. And it's an alphanumeric sequence that creates something called an ECCN. And so you have different options on that. You could get it from the manufacturer if you didn't manufacture the product. You can self-classify with an engineer, or if you want, you can go to the Bureau of Industry and Security, or BIS, and file for what's called a CCAT. Sometimes you're able to go and find your competitors' products already classified and use that as well. That's another trick of the trade. The other part, Robert, and this is just as important, is where are the goods going? And we have like a heat map that we sometimes show, and this heat map shows countries that are sanctioned, um, countries that have restrictions on them. So, the most common ones of course, is North Korea, Cuba, Iran, Syria, and some parts of Sudan as well. So it's important to know where you're exporting the goods. And then the next step under export due diligence is knowing who you're selling it to. So it's just not who you're selling it to, but who's going to be the ultimate consignee. That end user needs to be screened. In the trade.gov has a great consolidated screening list. So if your goods are, let's say, EAR 99, they're going to a country that's not sanctioned, you still have to screen the end user. And so it's a very important step that's required. And so if you went and did the consolidated screening list, put the fuzzy option on it, put in the company name and address in the country, and it comes up and there's no result, save that for your records for one. But then you know that you're selling to a bona fide company and not a bad actor. That's very important. And then last but not least, certain end uses of products are restricted, even if the goods are EAR 99 goods. And so they're not on the Commerce Control List if they're going to be used for a nuclear purpose. They're going to be used to make an unmanned aircraft. So any of these ones that are named in 744, the EAR, you may need a license to be able to export those goods. So this is something that's very important.
All right,
So,
next slide. All right. So I see there's a number of questions, and I'll just knock a couple of them down real fast. On the report, the license value to report, if the license value was 45,000, but the total of goods being exported was 41,000, you would report the 41,000 as the value being exported, not the full 45,000. And then the other one was the question about what if the FPPI agent will not send you a copy of the EEI? And we are going to get to that one. So never fear. So we'll try to answer all these questions, especially at the end. And again, if you can put them in the Q&A as opposed to the chat, I think it'll be a little easier to corral. So Incoterms. This is really important when it comes to documentation and also obligations. So Incoterms define who pays the costs for the various parts of the supply chain. So whether it's the inland trucking, whether it's the international freight, air or ocean, maybe rail in some cases, or truck. And also talks about things like terminal handling charges and, destination delivery charges and, loading and unloading and what happens if there's demurrage. So there's a lot of cost in there and also obligations. So who is obligated? Is the buyer or the seller obligated? So as an exporter, you're the seller. What are your obligations? And documentation, yes, you still have to provide documents to export, but sometimes they're impacted somewhat by what Incoterms you're using. So let's go to the next slide. So the first thing, our lovely animation didn't work, but it's okay. It's all there. So we like to illustrate the risk points. So when we talk about risk in Incoterms, that's the other part of Incoterms. Cost and obligation is one. Risk of loss or damage to the goods is the other. And the transfer of that risk from you, the seller, to the buyer, right, is very important. Why is it important? Well, you need to understand what you're responsible for if the goods are damaged and when. It may impact your ability to recognize revenue because very often risk transfer is used to help recognize revenue, always important to both organizations and salespeople. So this particular chart is really cool. Jim and I love this one because what it does is it shows you those risk transfer points so that you can see visually where the risk transfers from you as a seller to the buyer overseas. And what I like about this is you'll notice that in many cases, sellers have a mistaken interpretation of when that risk is transferring. So most sellers know that E and F Incoterms rules, that risk transfer is very, very early on the origin side. But many people believe that the C rules, because when you use a C rule, you're basically, carriage paid to, cost and freight, all the way to a named place on the destination side. So those C rules are taking those goods all the way to destination in terms of cost for the seller. But notice that the risk transfer points are the same as the F rules. So we just like to point that out. We don't have time. We like Incoterms. Jim and I could do 2 hours on Incoterms easily. But we just want to show you as a seller, be aware that just because you use a C rule and pay for the freight doesn't mean you're taking on more risk or delaying the revenue recognition. Okay. Next slide. Now, what this is using the multimodal Incoterms. So these are the ones that are all modes of transportation, and they're listed here in order of where the seller has increased control, risk, and cost. So we've laid it out, from left to right. Be aware that Incoterms must state a specific location, right? And when we say specific, we mean specific. From the time you put it in your purchase order or your sales contract, you absolutely want to make sure that named place is specific. Jim and I have great stories of people who got stung by having to pay extra charges because they weren't specific. And the result of that was that one of the parties, either the seller or the buyer, suddenly had to pay additional charges. And my favorite example is I hate when people, say FOB port. Which port? You could be paying for trucking to New York, or you could be paying for trucking to Los Angeles. So these kinds of things you want to be specific. And if you're looking at, and this is just a very general layout, as you move from E rules to F rules to C rules to D rules, the seller is going to have more control, and they're going to have more risk, and they're going to take on more costs. And for a deeper dive, you should definitely attend one of our wonderful Incoterms webinars that we do from time to time, especially in conjunction with Department of Commerce, because it's really important to understand these in terms of your export. Next slide. Now, a lot of exporters use Ex Works. For some of the reasons I just mentioned, they don't necessarily understand that there are other rules that could provide them with early revenue recognition. And there's a lot of reasons not to use Ex Works. Okay. Remember, the exporter is still accountable for all compliance. So a lot of exporters say, hey, it's Ex Works. The foreign principal party of interest is going to file the EEI through the authorized agent. We're just going to give them an SLI and we're out. Well, that doesn't take you out of compliance. If you're an exporter, even if you're not filing because it's a routed export and the FPPI is, you're still the US party who sold the goods and is exporting them. And so if it's done wrong, you're still going to get that call for compliance from whatever governmental agency is concerned. So XWorks doesn't remove any of your compliance responsibilities. In fact, it adds to your responsibilities because now you have to do things like, I don't know, chase those EEIs that the FPPI filed through their authorized agent. And when you contact the authorized agent for the FPPI, and say, hey, can I get a copy of that EEI? What do they say, Jim?
Mhm. They're just stall and delay and stuff like that.
Right, because you're not their client. Their client is the FPPI. So it's very difficult. It is a frustrating thing when you use XWorks. It's a routed export. And now you're chasing EEIs, which I mentioned already are really, really important to your export compliance. And if you don't have one and there is a violation, it becomes a lot more serious. It becomes an aggravating factor. So we want to make sure that we get those EEIs, and XWorks does not help with that, right? And there's payment issues too, where if you haven't received payment and you ship things out off your dock on an XWorks basis, right? You have that issue there, and you also have issues with what if you want to use a letter of credit to make sure you get paid, right? XWorks doesn't support the letter of credit. Okay. Revenue recognition, you do get early revenue recognition on XWorks, but you can also get it just as easily on FCA seller's premises, even on carriage paid to CPT, all the way to the name place on the destination side. The risk transfer happens just as early as XWorks and FCA, more or less. And so, from a revenue recognition standpoint, you often can still recognize revenue early using other Incoterms rules that are better, safer, more compliant for sellers. And of course, don't forget, you don't get to pick the forwarder. So most of you have forwarders that you have good relationships with, you trust, good communication, maybe web tracking. When you ship on an XWorks basis, you don't get to choose who moves the cargo internationally. In fact, you push the goods off your dock, and then you really don't have any idea where they go. They might never even leave the country, which could be a real issue when it comes to gray markets. So we get exporters who often say, hey, why am I competing against myself in Miami when, you know, I ship the goods down there and then suddenly they end up in the market? And that's because the buyer overseas decided it was better to leave the goods in the US and make money in the US. And now there's gray market goods competing with your distributors who are buying the goods legitimately. And of course, they're irritated as well. Okay. So it's very difficult to verify where your goods actually go on XWorks. Next slide. So what are some good alternatives? Well, there are better alternatives for sellers. I mentioned CPT, carriage paid to. CIP is the same thing with insurance. There's cost and freight. This is an ocean only Incoterm rule, so you can't use this for multimodal, air, truck, rail. But this is another way to send your goods on a C rule. CIF is the same thing with insurance. And again, both of these C rules have pretty early transfers of risk, especially CPT. So they can be very advantageous. You can use DAP. There's a lot more risk involved for you as a seller, but more control of the cargo. And then the last thing is, in many cases, people say, look, you know, the buyer wants to use their own forwarder. I can't get them off of that. How do I make it so I can file the EEI as the US PPI? And the answer is, first, use a rule like FCA, free carrier. The second part is it's still under the regulations, right? It's still considered a routed export. You're going to need an authorization from the buyer for you to file the EEI. Now, that's not a big deal, but it's just one of those things that right now there's a little inconsistency between the Incoterms and the export regulations where you have to get that written authorization. Next slide. Now, if you're purchasing as an importer, just a quick note here, right? There are better alternatives for purchasing. So you can use free carrier, you can use X Works with a cautionary note that if you're going to use X Works, be aware to work with a forwarder who is FCPA compliant, right? Foreign Corrupt Practices Act, because you want to make sure that nothing untoward happens overseas in your name as the buyer, right? And then you also have FOB, freight on board, for ocean freight, again, ocean only. And then also DAP, where the goods are delivered all the way to your door, but you still maintain control of the customs brokerage. And unfortunately, we don't have time to go into a deeper dive on Incoterms, but we wanted to give you sort of a broad brush of what might be best. And if you have more questions, we can try to answer them. But again, we do recommend that you attend some sort of Incoterms training if you're not familiar. Next slide.
So when it comes to export documentation, your shipment rides on paper. If Robert's paperwork's perfect and mine's a little sketchy, and customs either in this country or overseas looks at the paperwork and has questions, it's going to cause delays. It's going to cause a lot of questions to be raised. It's important that your documentation tells the story. Next slide. So these are the 5 most common documents. And if we were normally we'll do an export documentation presentation, it can go on for a good hour and a half. So, but the pro forma is one of the documents you would use. A lot of people call it a quotation proposal form. The next one we have is what's called a commercial invoice. Then you have the packing list, the shipper's letter instruction, and in some cases, certificate of origin, or could be a free trade one. These are the most common ones, and this is the tip of the day. I'd say you need to ask your buyer what forms they're going to require and how many copies they're going to need of those forms. How many times, Robert, have you seen where people will sell the goods, they'll ship it overseas, and they'll get an email saying, we need a certificate of origin, the shipment's stuck in customs at the airport, and we need this document. And now you're spending time running to the chamber, getting it chamberized, and then couriered overseas. If you had known this up front, it would have saved you a lot of running, shipment delays, storage and demurrage. So it's important that you ask that key question from your buyer. What documents do I need? Next slide, please. So the commercial invoice, this is that key document. It's going to help you get paid, but it's also going to help dictate the arrangement of the import formalities and the export formalities. And like I said, any delays is going to result in fees, storage, could be detained or seized. We've seen where people made mistakes on this document and held the shipment up for months in customs. So you have to be precise on this form. Next slide. So these are, the most common invoice errors that we see. And if anybody has any concern with their form, they can show it to their freight forwarder beforehand, ask them for comment. They can send it to their buyer and ask them to acknowledge that the invoice is going to be sufficient for customs in that country. Because, the last thing you want to do is have it where someone writes back and says, no, there's a mistake on this document. It's an original. You're better off asking that question right from the beginning. Is there any changes to the commercial invoice? But, obviously, country of origin is going to be the country of manufacture. Just because you bought it in the US doesn't mean it was made in the United States. So this is an important concept you have to keep in mind. What Incoterm did you sell these goods under? Schedule B number is not a mandatory element for an invoice, but a lot of times you'll see where people will show the Schedule B number and their ECCN number on the invoice. And in some cases, depending on the goods, you need to have your ECCN number. You know, obviously, if you have no charge items, it still requires a value. And the piece count needs to be accurate. Just in, as we talked earlier, that description of goods is critical. Customs doesn't know in the United States or overseas what an AT 1400 is. It could be your number one selling model that you have, but they don't know what that is. So you're going to need to sprinkle in lay terms so customs in both countries understands what those goods are. And then last but not least, it's advisable that you show a destination control statement on your commercial invoice. So it may be that you're going to have to embed this as a supplemental statement onto your invoice. And what does that statement look like? Next slide, please.
Just a quick note before you go into destination control statement. Someone asked an appropriate question here: is the CCI can be used as a commercial invoice? And the answer is we see this with Canadian shipments all the time. You can use a CCI, a Canada Customs invoice, as a commercial invoice if it has all the data elements, and vice versa. You can use a commercial invoice in lieu of a CCI if it has all of the required data elements of a CCI. So that's a simple answer, and we can dive deeper into that, separately, but I just wanted to mention that.
Robert, if someone's looking for a commercial invoice format, there is one on our website they could grab and use as well. But so back in 2016, they changed the destination control statement. There used to be one for commerce and one for state, and they did a blanket blended one. So this one here is good boilerplate for you to have on your invoice. It gives a warning to the buyer that they need to make sure that the goods are still under the control of the U.S. government and they're not allowed to be diverted to another country, a bad actor as well. So this is something very important. And the other suggestion I have is that you should always have that I hereby certify that this invoice is true and correct. This is a really important statement that should be on there because certain countries in Latin America are worried about people using not the invoice that was paid, but a different amount. There's another tip here I wanted to give. Always sign your invoices in blue ink. Certain countries require it, like Brazil. Other countries, it's not a requirement. So it's just easier to remember to always sign your invoices in blue ink, so get a blue pen.
Yeah, I haven't bought anything but blue pens for 34 years because black pens were always problematic, and red pens used to get yelled at by customs if they found you had a red pen. So next slide. Now we have a ton of questions, Jim, so I'm going to try to move through some of this stuff pretty quickly.
Perfect.
Because I see people are really engaged, and I want to try to get to as many of those questions as we can. So we've mentioned the shipper's letter of instruction a number of times. This is really a foundational document. And basically, it's for the shipper. So I noticed one of the questions had to do with someone who said they were a producer and they were selling to someone else who was shipping. Hey, the shipper is the one who's responsible for providing this. Now, they may come to you as the producer and ask you certain information if they're trying to determine what the correct classification is, if perhaps a license might be required. So they may ask for your cooperation in determining some of these data elements. But remember, this is a shipper's letter of instruction. You want to watch out for things like related parties. Related parties for exporters is 10% common ownership. This is confusing for people who do imports because that criteria, that threshold for related importers is 5% of common ownership. So be aware of that. Watch for routed transactions and make sure you're checking off the box if it is a routed export transaction. super, super important on controlled exports, right? License number, exemption. If you have a situation with the USML munitions list or the commodity control list, all these things, you know, we need to make sure make it to the SLI. If it's not on the SLI, whoever's filing the EEI and AES, more acronyms, right, is not going to file the correct information. The person filing can only go by what's on that letter of instruction. Next slide. So here's some general instructions that are really important, right? If it's signed, right, then the SLI is a legal document providing power of attorney for that shipment, meaning that whoever gets this SLI signed by you, the shipper, is authorizing that party to file the EEI on your behalf, right? SLIs should be shipment specific and no blanket SLIs are allowed. Now we get this a lot. Oh, I always ship the same thing. So make a template and fill in the details and provide it for individual shipments. But when you ask your forwarder to accept a blanket SLI, it creates legal problems, especially if there's a problem later on, because you're not actually authorizing the shipment in that case. You're just giving them a blanket letter. So no blanket SLIs. The unsigned SLI can be used as a source of information. So sometimes if it's a routed export, you may be asked for an SLI where you, the USPPI, is not authorizing the transmission. So in that situation, you could complete and should complete an SLI and simply just not sign the authorization to transmit the information. And there shouldn't be any blanks. This is a big problem. We see this where shippers leave blanks and they'll say things like, well, we always ship the same thing. So the agent can just fill in the blanks from the past 100 shipments that we've done that were the same. And the answer is you have to fill in, because a blank does not indicate a yes or no answer. If the authorized agent files based on past experience, and this is the one shipment that's different, it's going to be a problem. And you're going to create a situation of legal peril for that filer who is trying to do their job and help you out. And meanwhile, because you didn't fill in the blanks, they were left to guess. So please fill in. No, don't leave any blanks on the shipper's letter of instruction. Next slide. So here we're just pointing out that there are some couple of really important things. Don't forget to include your forwarding agent name and address on the SLI. And really, really important, under ultimate consignee, there's a drop down. Most of you are shipping direct to the customer. You may be shipping to a reseller or distributor, maybe a government entity, but it is not a good idea to indicate other unknown. Okay. This is a situation where you're inviting scrutiny, because if you don't know the entity that you're shipping to, what they are, that signals to BIS and to customs that there may be a problem here. Right, Jim?
Exactly. I was told by a BIS official, if you're indicating other unknown, if you don't know who you're selling to, you have a problem.
Yeah, absolutely. So with that, it wasn't a lot of time, but I know there's a ton of questions. So I think we should probably shift over to that with the time we have remaining. And I just pulled up the Q&A panel here. And someone asked, why can't you share the EEI with an FPPI? Jim.
Okay, so if you go
This
to
is a short one.
30.60 in the regs for the AES, it says that you need to get government approval to do this. And it's subject to a fine. The fine is $15,256 right now,
Right.
due to inflation. So,
Right. So it's
just
by
not allowed.
regulation.
It's considered confidential.
Right. It's by regulation. So that's why you can't share it. If it wasn't in the regulations, you would be fine with it. We use our product description in the commodity lines, but then put a statement on the invoice as to what exactly the product is and what it's used for. Is this advisable?
Yep.
I'm not sure exactly. We put our. I mean, I think the answer is you should be as descriptive as possible, both on the SLI and the commercial invoice. It just makes things easier. The less specific it is on those documents, the more likely you're going to have some issues. The next question from Jackie: what if the FPPI agent will not send you a copy of the EEI? What options do you have to obtain one? Well, to obtain an EEI, none. But you might be able to get the filing data through ACE through an exporter report. So if you have an ACE portal account as an exporter, you can obtain the EEI data that was filed on your behalf, right, as the US PPI from the FPPI's authorized agent. But as far as obtaining the actual EEI from the FPPI, if they don't want to give it to you, not much you can do, right, Jim?
You can request it several times and warn the forwarder that you are going to report them to census.
Right.
And you can do that, especially if you have goods that are um um let's highly regulated.
Right.
I'm looking for the right word there.
Right.
Thanks, Robert.
Well, and the other thing is you'll probably have better luck going to your buyer than the buyer. Like if the agent is not giving you the information, just go to your buyer and say, look, I need this. Can you
Hmm.
please tell your agent to give this to us, or can you get it and send it to us? Sometimes we get this argument, from people overseas. Well, you don't provide it to us. Why should we provide it to you? Well, you can't provide it to the FPPI by regulation, but there's no restriction for the FPPI to provide that EEI back to the US PPI.
Mhm.
Okay. Let's see. Agents have to research end users too, or is it the US PPI responsibility? So, in terms of people filing your EEI, certainly most filers will have controls in place in their software to check, for example, denied parties. But ultimately, that responsibility to make sure that your end user is not a restricted party or sanctioned or has some other kind of issue, that belongs to the US PPI, right, Jim?
Mhm. Exactly.
Okay. Oh, Jim, here's one for you. What Incoterm do you use for prepay and add freight? I know this is one of your favorites.
Okay. FCA, seller's premises. If you look in A4, which is a buyer obligation, it says they can do a prepay and add at the expense and risk of the buyer. Thanks, Robert. I love that one.
Yep. All right. Some US PPIs do not want to send SLI or POI so the agent can file the EEI. Options. Tell the US PPI to self-file.
Hmm.
I mean, I don't know what else to do there. If they don't
Yeah.
want to authorize anyone else to do it, they have to file it themselves.
Yep.
The value on the SLI, does that include the freight charges? Jim?
So the way the valuation's set up in the AES system, it's technically supposed to be from your door to the port of export. What we normally see happens is people are just declaring the X works or FCA value at the seller's premises. Um, Technically, you're supposed to be declaring the inland as well.
Right. So it should include it. I saw there was another question relating to, the discrepancy between what's being reported. Some forwarders, include the freight, some don't. Look, the inland should be included to the port of export. That's what it says in the regulations. However, like you said, Jim, sometimes it's in there, sometimes it's not. If it's not in there, it's not considered accurate. Okay. Um, I like this one. Can you still reference Incoterms 2010? Yes. And you can reference Incoterms 2000. And you can reference Incoterms 1990 as long as when you reference Incoterms, you put that year after the word Incoterms. So, yes, all of those rules are still valid. Not sure why exactly people would want to use old Incoterms, but you can as long as you are specific. Okay. Now this one I'm not sure. Let's see. Well, what would you suggest when you feel there may be a straw buyer? For example, someone physically outside of Russia who may be buying for a Russian entity. You have suspicion, but not hard proof. Be
I
careful.
Yep, I got this one, Robert.
Yep.
So I actually responded to that. We actually, in our newsletter last month, put in an article about this. The Department of Justice with Treasury and with Commerce did a tri-seal compliance note on how to do this. And I threw it into the chat, so maybe someone can look at this or I can share it with John and share and Jacqueline, and we can get it out to everybody. But this is an important note that they just addressed last month.
Okay, great. So I have a quick hitter here. I'll answer this. What is a good alternative to Ex Works if you're a seller? A great alternative is FCA seller's premises. That brings, it's still a routed export, but it brings back the export filing to you as the exporter. Again, you'll still need a written authorization from the buyer, but it is a better alternative for a couple of reasons, including that. Shelley Burnell asked a question about for products that are not licensed like food, can you please share the risks, if any, to the USPPI for authorizing the FPPI's agent to file the EEI without any oversight or record keeping? Well, let me answer that in a general way. If you can't get oversight or record keeping, if you can't get the EEI, that is a real problem. So we don't have time to dive deep in this one, but Shelley, if you have additional questions, reach out to Jim or myself and we can talk in greater detail. Another question, we're right at 11, so we'll take one or two more, and then in the interest of time, we'll have to cut off. So let's just take a couple of quick hitters. Who is responsible to advise which documents are necessary, the buyer or the seller? Jim?
I'm sorry. Go ahead, Robert. I missed that one.
Who is responsible to advise which documents are necessary, the buyer or the seller?
So in most cases, it's always going to be the buyer, but you're going to have some responsibilities as the seller that for export compliance that don't match up with the buyer. So, yep.
Okay, one last one real fast, because I see a couple of questions about electronic or digital signatures and whether they're allowed. And the answer is, I'm going to give a lawyer answer, right? It depends, right? So you have to understand who is requiring that signature. In the US, very often digital signatures are allowed. There are certain exceptions. That's a very nuanced legal question, so I don't want to give a blanket answer. Generally speaking, digital signatures are becoming more acceptable, but they're not always. So you need to know the specifics, and we can help guide you with that if you have a specific question about a specific scenario. So with that, we're a little over. I apologize. I'm going to turn it back to our gracious hosts and thank them, and thank everybody for listening today. And hopefully we can get a hard copy of these questions and maybe send them out as a hard copy answers to the participants.
Excellent idea. Thank you for offering that. This is John Tracy again. A huge thank you to Robert and Jim for sharing their expertise with us today. It's no surprise to me. I've had the pleasure of working with them alongside them for many years. And I just always appreciate when they present on any topic related to international transportation and logistics and international business. So thank you to the audience participants. You have figured out already how to connect with them for your follow-up questions and more counseling and more service assistance as you need it. Thank you again to Jackie, my colleague, who did all the heavy lifting. And thank you most of all to the audience. Thank you for participating. Thank you for your interest in the topic. Thank you for your continued efforts in expanding the mission of growing your global exports. And please stay tuned. After you've connected with your local office of the U.S. Commercial Service, please stay tuned for future programming. And we look forward to seeing you at the next event. Have a great day.
John, thank